I hope everyone had a good Thanksgiving, had yummy food. I myself, I actually had yummy food, but I also did a lot of workout.
That's good.
Yeah,
That's a
in
good
compensate,
balance.
in
Did you
compensate.
did
Yeah.
you guys make turkey this year?
Yeah, we just turkey and ham. But for us, we just made ham to make it easier because we had two celebrations. One was with my host family, who I've known for the past like 14 years. We still celebrate with them, and the other is with my in-laws. It's a smaller group of people, just six of us. We'll just make ham because turkey is just too big.
Yeah,
You don't eat leftover for a week. Yeah.
I got cheated too this year. I bought like turkey leg that is already smoked
Uh,
because we don't like white meat anyway. So,
yeah.
hey
Understand.
guys,
Cool.
thank you for joining. We're gonna wait for a couple of minutes
Yeah.
for more folk
Actually,
to
it's
show up.
it's 5:03 already. We can get started. Okay.
Okay, sounds great.
Cool. Awesome. Well, thank you all for joining, spending your Monday afternoon or evening after the holidays. We're very excited to chat with you about mobile home parks, one of the most recession resistant assets, and why we have been focusing on it. We're offering opportunities through our Freedom Growth Fund, a fund that's for accredited investors. There's spots available as well. But today, before we talk too much about the fund, we just want to kind of tell you about what we plan on talking about today. Introduction of Grace and I. Most of you, we know you by first name, but we want to introduce ourselves briefly, talk to you about the economics in the market, what's going on today, and why we believe mobile home parks is still positioned so well for today and next year and beyond. And talk about how does profiting with mobile home parks and with us look like through the Freedom Growth Fund, and open up for Q&A. Disclaimer, as always, the webinar we host are for informational purpose only, very general in nature, doesn't really address any specific investment opportunities. It's not financial advice, and we encourage you to consult your financial advisors if you need to. And congratulate on being here. Financial freedom is only available for those who learn about it and work for it. I know folks here who's maybe attending so many webinars about passive investing but never pull the trigger. So it's up to you, right? You can have one or two jobs. And I know some people maybe for the tech industry, like a lot of my investors are in the tech space. They realize the power of passive income and alternative income as well. So make your money work for you. So let it grow in your sleep. And as far as me and Grace, we're not just investors. I myself is also a wife, a sister, as I was telling you earlier from my Thanksgiving. We spent it with my in-laws, and I'm also a sister. Where I have my brother, my 16-year-old brother, moved here from China. He's going to junior. He's going to school here, high school here. He's a junior, first generation immigrant as well. I value greatly the freedom this country brings and the opportunity that's been provided to me, and what I'm able to create through the opportunities that were given to me. But at first, just being first generation immigrant, I always knew the value of working hard and got into real estate with tenants and toilets, really. Quickly realized I wasn't scalable and it wasn't passive. It wasn't the lifestyle I wanted. I always wanted time, financial, and geography freedom. Being able to travel to other countries because I want to, or just to visit family, was very important for me. So I wanted to really invest for the long term and build a lifestyle that's sustainable for me in the future. So that's why I love passive investing. I went from a active investor quickly to passive investor and helping others to invest as well. How about you, Grace? What's your story here?
Yeah, it was similar to Missy. The reason why we kind of bonded, we had a similar value. Family is always like important to me. Before real estate, I'm a clinical pharmacist working in the hospitals, and I still like that profession, but it's not the most family friendly profession. We work like days and nights and weekends and holidays. So once I had my kids, my priority kind of shifted. And the main reason I got into real estate in the beginning, I started as an active investor, so I own real estate, so a small multifamily and single family. Even after replacing my income with the rental income, I thought I would get my time back, but property management and property owner and as a landlord is nothing passive. So that's when I pivoted to passive investing. I have been focused in passive investing for the last 2, 3 years. And finally, I get to a place that I get to choose to how to spend my time without time to my job or being a landlord. And the picture you see here is we took a 2 weeks road trip to Yellowstone, with my parents in the back and my kids and my husband. And when I was a landlord, I felt like I never have the gut to leave where I live because I feel like I'm always have to answer the call. So here, that's why Missy and I kind of connected, and we wanted to bring that passive investment more approachable, more accessible to folks like you guys.
Yeah, definitely. And this is a little bit more about us in case it's the first time you hear about us. Combined together, we have 10 million plus personal rentals, and we also have worked with 32, close to 40 investors as well at this point, and also raised 3 million plus dollars in funds. So this is not our first time doing it, and we've worked across multiple asset classes as well. I do want to highlight that Grace has, 3 mobile home parks that she manages personally, and she's going to kind of talk through, why she wants to invest as a passive investor in mobile home parks, along, using her active investor experience as well. But today, with those two components, we want to answer why mobile home parks now and profit with the impact. I'm going to talk about why mobile home parks now. So let's approach it with market realities. I don't know how you feel about the market, but a lot of times, recently I feel is uncertainty, right? Whether W-2 job or business, there's some level of uncertainties out there. Let's just look at the stats for the last 2 years. It's pretty volatile, right? Look at the S&P index. Last year was down 18%. This year's up 18%. I don't know what next year looks like. And then, with the new president potentially, et cetera, as well. Inflation, right? Last year was horrible. This year, right now, we have it kind of tamed. Instead of last year, 8% on that. We have about 3% this year with the latest data showing. But certainly the wages hasn't caught up yet, right? Most people have felt the inflation, how it impacts our day-to-day lives. And bonds has been pretty, you can see the numbers for bonds as well, between 3 and 4%. And the interest rate has gone up significantly, right? 2022, beginning of the year was around 3%. And end of the year, we're at getting close to the end of the year, around 7.5%. Definitely helping tame the inflation a little bit, but also significantly impacted real estate transactions and investments as well. There's different talks out there. Some are saying economy is still flashing recessions. Some saying inflation is really not 3.25%, and some like Walmart CEO, right, even says deflation could be coming after this year. Meaning instead of inflation could be deflation, prices going down. So we don't know. People are saying different things, right? If we all had a crystal ball, we wouldn't be here. But some of the quick stats, we know that U.S. economy running cycles. We know that there has been 11 recessions since 1950s. The average recession length is about 10.2 months. The shortest one was our COVID blip, and the longest one is 18 months versus the 3 month during COVID. But the average time between recessions is usually about 5 years and 6 months. So excluding the COVID blip, we'll have about 12 years since the last recession. So it just felt like it's coming, even though, it's not there yet. So what we found that makes sense for us personally and for our investors as well, based on our research, we see that it's really important for us to be diversified. And the number one of investing is to not lose your money in the first place. So how can we be diversified in a place that overall our capital is protected while it's to an extent, right, while it's growing? So the number one they want to do is diversify into less correlated assets that's recession resistant, less correlated to the stock market, as an example. And let's take a look at the mobile home park, what it's doing, mobile home park areas. So here's a chart from the City Investment Research showing how mobile home parks has been doing in the last two recessions, 2000 and 2020. Overall, mobile home parks have provided the best return of all real estate classes for the past 10 years. You can see that some of the other asset classes also, some have done well, some didn't, but mobile home parks has really done well throughout. And you're going to learn a little bit about the reason in the next few slides I'm going to show you. Just as an example, some of you may not know how the model really works. You see the home itself and you see the pad. So a lot of times there is the home rent and there is the pad rent if the home is not owned by the resident itself. So right now in the multifamily space, if you ever invest in that space, a lot of the markets in terms of multifamily rent has either slowed down significantly in growth or even sometimes with negative growth in markets like Phoenix, Atlanta, as an example. But in mobile home parks, it's a different story. In the South, there has been recorded the highest growth rates at 9.5% year over year, bringing the average annual month rent to $694 That's just for the lot rent, not the home, but the lot rent. And Northeast region even has the fewest amount of mobile home park communities. They have their growth rate is about 4.4, right? It's still continuing to grow at a very healthy, high rate. And in commercial real estate, what we usually invest with real estate syndications, we love real estate syndications and commercial real estate because it's income driven. If we can find ways to bring up the income, right, we can more likely to sell at a higher price at the end. But what's the likelihood is depending on the cap rate, which basically describes what's going on in the market for that particular asset class. The market can be based on the overall economy, based on the asset class, could be region specific. But let's take a look at this chart here. The manufactured housing community average cap rate based on two major sources, CoStar and MSCI. We can see that both of them showing cap rate compressing. And compressing means it's good, meaning there's more people demanding it, both from a renter standpoint, more renters need affordable housing, and also more investors see strong returns from this area, so they're willing to pay higher price for it. It's great to be on the side of selling for sure, especially if you bought parks earlier on. However, based on the trend we saw even before that, right, it continues to compress through 2009, even in recessions. People even need more affordable housing more and more, especially in the area where we have, in the time in history where we have a need for housing in general. So basically, moving forward, we'll continue to project that mobile home park. It continue to grow in terms of an investment standpoint. Some of the other asset classes could also be really good that we're also looking at for our Freedom Growth Fund as well, which such as industrial storage, but mobile home parks, we feel very strongly about, especially based on Grace's experience running the parks and some of the unique advantages we see with mobile home parks. So the unique advantages it offers is really based on a few factors. We talked about the demand for affordable housing, right? Almost 20 million Americans, that's 1 out of 18, live in mobile home parks. Baby boomers retiring with very little savings and living on Social Security, right? It's unfortunate in this environment where inflation is so high, but they're living on fixed income. So they have to find ways to have affordable homes. Also, there is just limited supply. Just overall housing shortage in general is a concern. But when it comes to mobile home parks, they're really not building many new ones. In fact, about 10 new mobile home parks built in the entire United States in a typical year. I think as of August this year, when I looked at the report, there were only 3 mobile home parks, only a few hundred pads built throughout the US. Most of the reasons because the cities and municipalities don't want to have mobile parks in their city, or they don't collect as much revenue from it. And we talked about renters, how it compares to mobile home park, compares to multifamily. As an example, mobile home park renters tend to have longer commitment to live in a particular place because they typically own their home. So they don't want to move, right? It costs quite a few $1,000s, depending on how far they move, to move that entire home. So they're less likely to move. So as long as the rent increases are reasonable, they're more likely to stay. And the market is very fragmented. You probably have seen mobile home parks with just like 40, 50 lots, maybe 20, 10 lots. A lot of times they're run by small mom and pop operators. That gives us an operational partners opportunity to go in there and really professionally manage them and value add and make it an asset that's both attractive to the residents in there, meaning they feel safe, they feel amenities, are being taken care of, versus just a rundown mobile home park, right? Which it could be in that way in some cases. Overall, through kind of the reasons we talked about from a demand standpoint and also supply standpoint, this makes a really good overall cash flow until a return opportunity, not just from a cash flow standpoint, but from an upside on itself. That's why we love it, because right now in this market, it's hard to find an opportunity that both cash flows and have an upside. It's usually one or the other, especially in the multifamily space, which is what a lot of investors are familiar with and can resonate with. And I just want to draw in the demand part a little bit more because it's so important to understand that like the need for affordable housing is just so high. And let's not talk about the other demographics. Let's just talk about baby boomers in general. They could be like my parents or my in-laws generation essentially. And I know the life they have to, budget under a lot of times. They're living with fixed income, right? And essentially, right, some of the stats here is they have average $152,000 net worth, right? So they really need affordable housing to make it work. So, and I already kind of mentioned about the supply aspect, but to dial in a little bit more, not in my backyard, that's very frequent. You know, in any of the municipalities, if you see a mobile home park in the middle of the city or within the city, it's been there for years. As the city expanded, it's there. But if you're saying, hey, I'm going to build a mobile home park, they're not going to want you to have it in the city. And it really doesn't give them as much tax and revenue compared to the other things that they could be building there. So, and for everybody else, they feel there's such a demand for apartments, townhomes, etc. already. There is really not a strong enough incentive to build mobile home parks given all the other priorities. So supply and demand makes it very, very attractive opportunities in general. So what does this mean from an operation standpoint, and how does that really, work for you as an investor potentially, whether you work with us or decided to go into this asset class on your own? I have to say that this asset class is very management intensive, and Grace is going to talk to us a little bit more about what that looks like, both from advantage and disadvantage standpoint, and why we decided to invest passively and not invest actively.
Yeah, thank you so much, Missy. I think you summarized it really well. I kind of want to kind of re-emphasize the reason why we love mobile home park, especially in today's environment. I mean, as mentioned before, like even with the rent increase, continued rent increase, the average rent for the lot is still under $1,000. Like we're looking at $600, which is apartment rent easily over 1,000 nowadays. So by far, mobile home park is the most affordable housing that we could provide to people. So that's the reason why it performed extremely well, especially during the recession time. And then when we look at the supply and demand, and that's another metric that we look at, like with being like a lot of apartment building being overbuilt in different area of the country, mobile home park is not being built as fast as apartment. In fact, like very limited new supply coming online. So being able to tap into this opportunity before it's too late, this is something that, Missy and I are very passionate about. So in terms of mobile home park, like how do you make profit, right? It's very unique business model. Along with all the advantages that we look at, there are some unique challenges that specifically for mobile home park. And as a part owner myself, like owning a 3 part myself, I experienced some of the challenges firsthand. So let's just go through the challenges first. So there's a lot of lender willing to lend on apartment buildings, but in terms of mobile home park, can be because a bank, like fewer bank understanding the business in detail or in depth. So it's actually harder to find financing for mobile home park, especially with the smaller parts. And then majority of the parts are smaller. And as what Missy mentioned before, it's kind of fragmented. Like it's not hard to find an apartment building, 100 unit, but it's quite hard to find a part that's 100 pets. Majority of them is like 40 lots or less. And also they're also being built in a remote area because, people are not going to build mobile home park within the city. And that created a challenge itself because when you own a smaller part in a remote area that require a lot more managing, I guess like it will have a lot less economic efficiency because now you traveling far and trying to manage a small part. So even the cash flow can be appealing on paper, but some of the maintenance costs or traveling costs and management costs can eat into the cash flow really quickly. And then the third challenge is, unlike the multifamily, professional third-party management is very hard to combine because not a lot of third-party management company know how to manage mobile home park. And then lastly, and the most important piece of mobile home park is that we are dealing with lower income tenants. That means management could be intensive. And because all these challenges, this is the main reason why Missy and I chose to work with operator that already have a portfolio built up, had a footprint on the local market, so that we can leverage the systems and manpower and also the portfolio number of lots to achieve the economic efficiency, and also don't have to be on the forefront in terms of the management headache. But there's also a lot of advantage that come with a mobile home park that is not available in other asset type. Because the bank is not likely to finance, or it's harder to find bank finance a mobile home park. Owner financing is actually quite common in a mobile home park setting. And I love owner financing. I don't know about you, because when you deal directly with the owner, they have an incentive to sell. You can be pretty creative in terms of the financing terms, potential result in like a lower down payment and less financing fee and etc. And then secondly, in terms of, when we talk about the part being fragmented, what we're seeing right now is a lot of like professional, I wouldn't say a lot of, like the professional operator actually looking to create a portfolio, meaning like combine a few more smaller mobile home part into a portfolio and turn that around so that we can attract institutional professional buyer at the end as an exit. And then the last point here is what I love mobile home the most. There are multiple ways to create income. So typically in the mobile home park setting, the business plan is to lease a lot to tenants who already own their home. So meaning that we are collecting the rent on the lot rent only, and because the tenant own their own home, so we are not obligated to maintain their home. They take care of their maintenance. So that's the perk of owning a mobile home park, because you're basically really just like a landlord, meaning that you only own the land, not the homes. Now, when we buy part, that some of the home might still owned by the part, or there are some vacant lots that are available for you to bring new homes in or use homes in, then in that case, there's a second opportunity to create extra income. So we can bring homes in, or we can encourage bring homes in, use on new homes, or renovate the part owned home, and then we turn around and sell to the tenant on a promissory note. In that case, we are not only collecting the lot rent, but we also uh, receiving the principal and interest payment monthly from tenants. So that's an extra stream of income. And this is actually a great way to create a lot of cash flow without a lot of investment, because a lot of time those new homes can be financed with a bank. And then after that, we can also rent sheds and also provide like on-site self-storage for a fee. And in the mobile home part, because the lower entry price, so with less like $1 million, you can buy maybe 50, 60 lots already. So even with a small increment rent increase in each lot, like a $10, $15, can increase the cash flow tremendously without actually putting any huge expenditure in the improvement. So because of all those points I mentioned before, cash flow is definitely a lot better in a mobile home park setting compared to multifamily. So how are we locating, like as I mentioned earlier, right? In order to achieve economic efficiency and without owning a park, or getting the benefit by owning a mobile home park without the management intensive headache, we decide to work with like local operator that are experienced. So this is a slide that tells you like our due diligence process. So we definitely looking for experienced operators that already have a footprint in the local market, that have exited deals that are successful, that with great returns, and also they will have to align with our core value. Like we're not just out there to making profit, but we're trying to build a community and provide affordable housing to folks. So the operator would have to be willing to work with the tenants in the park.
Yeah, and I just wanted to add that, we're just listing kind of like key steps we do, but it's a very thorough process that we go through, like, more than 100 points that we check through, from all the things here to all the way to legal and specific detail underwriting, re-underwriting, etc., checking out comps. So I know it's kind of high level here, but yeah, it definitely goes way more into details than this as well.
Yeah, this is kind of like the breakdown of like the structure that when we go through due diligence, like first of all, like the people is the number one thing that we'll look at, because if without a good sponsor, the business plan is down the drain. So we have a regular procedure or process to select sponsor to work with. And we're looking at three main things. And as I mentioned before, they have to have a strong local presence. So they already should have deals and own parts in locally and operate in them successfully. And also we're looking at track record, right? with successful exit, they have to exit like 1 to 2 deals locally and similar business plan for us to gauge whether or not, they could repeat the process again. And then also, we are looking out for our investors. So making money is great, but also the experience matters. We're looking for sponsor that actually are very transparent and not afraid to share the bad news. So, like all deals have some, all deals can run into some problems. None of the business plan can be like 100%, operate as planned. So we want to work with people like sponsor that not only sharing the good news, but also open to sharing the bad news and provide like good reporting and have a good moral. And that's the three things that we like the major thing that we look at. And then after we select the sponsor in the local market, then we're looking at the market itself. So, and we have a due diligence checklist, as Missy mentioned, and I can go in a little bit more detail, like as far the location wise, what kind of metric that we look at later. And then after the market pass our checklist or the checkpoint, and that's when we go into the assets due diligence, and we're doing the underwriting and also looking at the asset itself. Okay, so just like all the other real estate, location is key, right? So in order to buy a part in a location that have a chance to thrive and make sure the location is good, we look at some criteria, the target criteria. The number one thing that we'll look at is populations. So as I mentioned before, like some of the part actually located in a pretty remote area. So some of the part might or might not be in the metropolitan area. So if the part is within a metropolitan area, that we wanted the population minimally 50,000 and above. And if it happened in this area that is not belonging to a metropolitan area, then it has to have a population 20,000 or plus. And the reason why being this is just to make sure that we have a big enough population to justify for those like big box like retailer to come in to provide like diversified employment opportunities. And then also we're looking at like a minimum of 0.4% population growth annually. And another metric that we also look at is the median household income. Even though we are providing affordable housings, but we still want to be in the area that they can afford the rent, because we are projecting rent increase over the years. And then another thing that we look at, because we are in the business of affordable housing, so we want to compare our rent, a mobile home park rent, to a local apartment rent and see how affordable it is compared to that. So here's like, at the 2 bedroom apartment, we look at like at least like $900 per month. Or in another word, that we want to make sure that mobile home park rent is either a 1/2 or 1/3 of the local 2 to 3 bedroom apartment rent. So then make the mobile home park is a lot more attractive in terms of affordability. So like Florence in South Carolina, we are recently conducting due diligence. Is actually on the last tranche on the due diligence process. And this is give you example like what a typical good market looks like. So Florence in South Carolina have a population 39,000. So this is a city that is not within the metropolitan area. If you recall, we're only looking at a 20,000 and plus, and this is definitely meet the criteria. And we also look in the medium household income, 40,000 plus, and this one have a 52,000. And then when you look at the apartment rent, a 2 bedroom $1,000, and a 3 bedroom apartment rent is 1,200. And something that I didn't mention from the previous slide, we also looking at the medium property value. So typically we're looking at property that with a 80,000 and more in the property value in order to make sure that it's actually cheaper to own a mobile home rather than buying a home, make it more attractive in comparison. So just to wrap things up, just to show, I mean, a case study probably speak the most in terms of what kind of operator and what kind of business plan and what kind of outcome that we're looking for in terms of seeking for operation partners. This is a case study from the operator that we recently conducted diligence in South Carolina. So the part was purchased in 2021 and with an 82 space. and 100% of the self-storage, 65 self-storage was vacant, and 100% of the single family was vacant. It was a two-star community, so just like a hotel, a mobile home park is being rated like by the quality, in terms of stars. And there's also a 3-unit office building were vacant. The purchase price at that point was 2.6 million. And then after 24 months, the operator able to fill the vacant lots with homes and also renovate the single family and office building and also like leasing up the self-storage and also raise the rent from 374 to 450. And within 24 months, they are qualified for Fannie Mae refinancing at a valuation of 5.6 million. So after refinance, majority of the initial investor capital got returned back to the investor. And then the investor still stay in the deal, still cash flowing. So whatever money that get from there it's almost like an infinite return. So we are wrapping things up after this slide. So we are looking at a deal right now that operate by the same operator that we just conducted due diligence on, and is the final stage because it is a 506B offering. It means that we are not allowed to openly advertise unless you are personally connected with, either Missy or I as a personal connection. So we are going to send out more information to the people already within our circle. So anybody here, if you guys are interested to know more about mobile home park investing and potential more detail on the deal that we are looking to roll out in the week or two, please reach out personally to our email, and then we need to set up a call and get to know you before you can invest or to choose to invest in the deal.
Great. Yeah. Thank you, Grace. Okay. Now we're moving to the Q&A section of this webinar. So we'll give it a minute for people to ask any questions. But as a reminder, this is part of a mobile Freedom Growth Fund opportunity. It's essentially consistent of many different opportunities. You do have to be a accredited investor to invest, but one of the earlier opportunities we launched is a FGF, which is Freedom Growth Fund, DLP Lending Fund, so first lien position fund, evergreen, providing liquidity and capital preservation focus as well. And this one is kind of both cash flow and upside focus, which are some of the things that our investors have been asking for. And the best part we love about it, even though refinance is never guaranteed, but the ability to somewhat confidently, right, like given the heavy value add to return capital earlier on, is something we love as well, because it gives investors the ability to reinvest the money somewhere else, whether it's another mobile home park or something else. So those we do love. We wanted to highlight on that. Okay, we have a question here coming, Grace. So since you operated as a mobile home park operator, what were some of the personal challenges that you had as an operator, that makes you like, makes you say, hey, if I can do this passively and get good returns, why do I want to do actively?
Yeah, so some of the challenges, as I share in the previous slides, there's actually multiple challenges. Management is intensive because you're dealing with lower income tenants. So collection is almost like operation. So in order to, achieve economic efficiency, you need to own more pads, right? And you want to own more pads in a similar or close area in proximity, in distance, so then you can manage them together. And also because third-party property management is almost unheard of in a mobile home park setting, because there's just not a lot of property management actually taught or know how to manage property management. So when you buy a mobile home park yourself, you almost have to be committed as a manager, right? And then in terms of managing from far away, with a smaller pad, imagine that you have to travel back and forth and make sure that you keep an eye on it all the time. Your cash flow can be eaten away quickly, right? It can look good on paper, but at the end, after minus the traveling costs and minus some of the collection problems, you might not even get any cash flow. So I think management, is by far is the number one headache that I'm experiencing. But that's why instead of buying more mobile home park for myself alone, I would much rather to work with an experienced operator, already have the portfolio built up and also have a team, especially in-house property management team and renovation team to to achieve those return without being tied down as a property manager.
Yeah, good point. Partner with someone who's experienced, standing on the shoulders of a giant. Great. The next question we have is, based on, Grace take more of a lead on the due diligence side. The question is good for you to answer on due diligence. What are some of the mistakes you see other operators or mobile home parks make in their underwriting with their overall pro forma projections? Mhm.
So in terms of operation goes, right, some of the operator can assume the expenses is quite low, right? Because you are owning the land and you're not managing the mobile home. But as there are surprises such as like, private utilities, like septic and those things that need to be maintained, that can be costly. So a lot of operator might not budget that upfront, right? So that's something that I always look at when I do underwriting, making sure the expenses assumption is not aggressive, meaning conservative. They budget more than they need. Having that being said, it's not uncommon to see a low expenses in the mobile home park compared to multifamily, given the fact that even a mobile home, if you renovate it, the material is a lot less compared to a brick, brick and mortar building. So typically you're looking at 35 to 45, depending on the age of the mobile home part, and whether or not they have a public or a private utilities. And then the second mistake that I see people, make in underwriting is that they assume buying used homes when they are trying to buy homes for a vacant lot to infill. And so they under budget the home purchase price because used home used to be pretty prevalent and pretty easy to identify and bring in. But as the inflation go up and like supply chain is being impacted, finding a used home that are good price is actually pretty challenging. So if a operator budget home purchase as a using the used home with a lower budget, the business plan might not be able to execute it, right? And then the third thing that I saw that people made mistake is they assume infill is very easy. So they just like, okay, I assume I want to bring 10 homes in 1 month and have it all renovated. That's too ambitious. There's a lot more things. There's a lot more things that I'm looking at, but those are the three main things that I'm looking at.
Yeah, that's great. Another question is more around what are the benefits around investing in mobile home parks apart from the cash flow and the upside? I know to answer that question, the depreciation is also huge in mobile home parks, depending on, right? I mean, there's two aspects to it. One is you have the land, which really doesn't depreciate, but you do have the infrastructure you put in there and also the mobile homes itself. So a lot of times, along with the bonus depreciations that we have, you can see it's not abnormal to see when you're between 40 to sometimes even over 100% depreciated, which can be really beneficial for real estate investors. I know some of the investors you work with, Grace, they're real estate agents, so they can really benefit from this type of depreciations against their active income or their real estate professional income as well. Cool. So we're just in the kind of the final stages of our due diligence, and we're actually going, I'm not going to talk too much about it, but we're providing some type of incentive for folks who work with us earlier versus later, given the fast closing timeline. So if this is something you're interested in, definitely take advantage of what we're able to offer and talk to either Grace and I, depending on who invited you to the webinar, and talk through those.
Yeah, and also the available investor seed for this investment is limited. We kind of squeeze ourselves in is a really good deal. So I'm not just saying this for the sake of saying this, is limited. So if you are truly interested to know more, please reach out ASAP.
Thank you, Grace, and thank you guys for joining. If anything, I hope you took away some learnings for investing in general, whether you invest with us or not. We really appreciate you taking the time and spend your evening with us. Thank you again. Have a good
Thank
night.
you guys. Have a good night.